This week's LOLC Securities Weekly Market Roundup. I'm Tharandu Amarasekara.
And I am Megara Vijayamana. This is the sound of profitability.
S&P ratings increased Sri Lanka's rating from selective default to non-investment rate CCC plus due to the stable outlook of the economy and the speedy recovery since the 2022 economic crisis.
It has been the first rating improvement by the S&P since the unprecedented crisis 3 years ago. S&P slashed Sri Lanka's rating as an issuer of foreign currency debt to selective default after the island nation missed sovereign bond interest payments in April 2022. It said the stable outlook reflects a balance between its expectation of Sri Lanka's continued economic recovery, supported by fiscal reforms and external improvements.
The French Development Agency is keen to support the development of pumped storage plants as part of its commitment in climate change resilience and green energy.
A pumped storage plant consists of two dams in a cascade where water is collected in the lower reservoir as power is generated from the plant on the top. The water will be pumped back up during the daytime when solar power is plentiful, to be used later when demand is higher. This system is sometimes called a water battery. Hydro plants can also be used for frequency control, generally to provide stability to the grid with inertia to absorb shocks and prevent sunny Sunday blackout. Sri Lanka is seeking funding, the first 600 megawatt pumped storage plant where feasibility and other studies are underway.
Time for the corporate highlights. Sri Lanka's Union Assurance plc has sold its 22% stake in Fairfirst Insurance to Fairfax Asia Limited for 2.63 billion rupees.
Union Assurance is a subsidiary of John Keel's Holdings. The total price paid was 2,638,079,877 rupees. Fairfirst Insurance Limited operates in the non-life insurance segment and was previously treated as an associate of the John Keel's Group. Fairfax Asia Limited is a subsidiary of Fairfax Financial Holdings.
Sri Lanka's Acme Printing and Packaging plans a 6-to-1 rights issue of 570 million voting ordinary shares at 2.5 rupees each to raise 1.4 billion rupees.
As the company stated, the cash will be used for the following purposes: to meet the cost of relocating the factory premises, to settle intercompany loans, to settle bank borrowings, to meet working capital requirements of the company, to initiate the key measures to prevent further losses and support recovery, which was presented to the shareholders pursuant to Section 220 of the Companies Act on 17 September 2025. The firm's current stated capital is 835,084,629 rupees.
More news from the debt markets. Sri Lanka's First Capital's proposed 3 billion rupees worth debenture sale has received stock exchange approval.
10 million listed rated senior unsecured redeemable 5-year debentures will be offered initially at 100 rupees each. If this is oversubscribed, another 10 million debentures will be offered. And if that too is oversubscribed, a further 10 million debentures will be offered.
Here is Tharandu with the ESG update of the week.
Sri Lanka's South Asia Gateway Terminals, a unit of JKH, announced that it had installed rooftop solar units in order to cover a part of its power requirements. They also are continuing to shift towards hybrid and electric gantries and forklifts.
A 460 kilowatt rooftop solar array was installed on its main offices. SAGT said it has made progress in reducing Scope 1 emissions, which are direct greenhouse gas emissions that come from sources owned or controlled by the organization, such as fuel combustion in company vehicles or facilities, through the hybrid conversion of its rubber-tired gantry or RTG crane fleet. 28 of its 31 cranes have been hybridized, contributing to a 22% reduction in carbon intensity per move over the past 6 years. The new solar project addresses Scope 2 emissions or indirect greenhouse gas emissions that result from the purchase of electricity, steam, heat or cooling by the organization, which accounted for 22% of SAGT's overall carbon footprint in the 2024-25 period.
Here's Megara with the international update of the week.
Nvidia stated that it would buy $5 billion worth of common stock from Intel, becoming a major shareholder of the company. This was announced weeks after the government of US announced roughly 10% stake ownership of the company.
The tech giant, which makes artificial intelligence chips, will pay $23.28 per share. The purchase will give Nvidia around 4% or more of Intel after new shares are issued to complete the deal. Intel shares surged by 22.77% and posted their biggest single-day gain since 1987. Nvidia shares, meanwhile, gained only by 3.49%. Last month, US President Donald Trump and Intel announced that the government was making a $8.9 billion investment in Intel's common stock, with Trump calling it a great American company that has an even more incredible future.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intel. We will see you in a brand new week.